Hello, this is Patrick. Welcome to Chart Built Wealth. Chart Built Wealth, profitable investing with technical analysis. Well, I wanted to go over my buy recommendations, which I do every week. And so I'm going to put these in order, not exact order, but the first three or four are the buy recommendations with the biggest potential. And usually that also includes more risk. And then the last few are going to be less upside, but probably less risk. So let's get into it. The first recommendation is short the S&P 500. So here's where I went short. Initially went short back here in early 2025. Went to neutral, went bearish again, went neutral, went bearish again. And so I'm probably underwater 4% or so. Now, when I'm bearish, the S&P 500, that doesn't mean I'm not bullish on anything. It just means that, for instance, in my portfolio, I'm probably 12% short the S&P 500. And then I have my other buy recommendations as longs. So, yes. The reason why I'm bearish on the S&P 500 is as we've hit all these higher highs in price on our relative strength index, we've hit lower highs. And so that's flashing a caution sign. That relative strength index, you want to see higher peaks as prices go higher, confirming those highs, but you're getting lower peaks and it's flashing a caution sign. Beware, a change of trend is coming. And so I'm going to stay with that with a portion of my portfolio. Verizon. Okay, so this is a buy recommendation that I made back in early August, and it was based on this symmetrical triangle, these two converging blue trend lines. And when it broke out, I went to a buy rating, measured the base of this triangle, you project that distance upward, and you come up with 50. And from that point, it was 13.5% higher. It's probably, I don't know, 10 or 11 at the current current level. But don't let that fool you. There's potentially a lot more upside. As I did on the initial Verizon buy video back in August, you can reference that. There's a much bigger pattern out there that spans 4 years in the making. And if we get up to 50 based on the smaller pattern, the bigger pattern will go into, will be intact. And as we get closer to that $50 level, I will be talking more and more about that bigger pattern. So this is a way to get involved in it. I think the upside is great. The potential downside, you're only looking at 1%, and the potential upside is, I don't know, let's call it 8 or 9% based on this pattern. So the reward to risk is very favorable. MJ, the cannabis ETF. So here's where we got bullish back in July. Here's where I went neutral after a 50% gain. We got back in a buy rating a few days later. And then I think it was like 3 days later, it was up 13%. I sold. And it went a little bit higher, and now it's down lower than where I sold. And so I'm reinitiating with a buy rating, which I did a couple days ago. And I'm looking for a new higher high. So anywhere 40 plus, I would start to sell again, especially if I saw a negative divergence like we saw on this high. So anyway, I think this is a good place to get in because if you look at the bigger pattern, this only goes back 6 months or so. This is the 7-year chart, and we see our 5-wave decline, and we're looking for an ABC corrective rally, and we're in the C leg, but I don't see 5 waves yet. I see 1, 2, 3, 4. We should have another higher high. And the previous high that we got confirmation of that high, no negative divergence. So I do like where we're at. We also have a confluence of moving averages all coming together, which is called a bullish rainbow convergence, a la Tom McClellan. And when prices come back to that convergence, if it can hold this convergence, it promises a higher high. So the setup is there. We'll see what happens. Bullish on MJ, the cannabis ETF. GSG, this is the iShares Commodity Index. This is 60% energy. This is, I believe, 20 or 25% agricultural. It's got metals. It's a broad-based index, but it's got a lot of energy. And for those of you that saw the commodities tsunami video, YouTube, um, a lot of it was based on energy, which has been in a 3-year consolidation. If it can break out to the upside, it'll really get commodities rolling, and it looks similar to this diversified commodity index. So this is a 1, 2, 3 year pattern. We had a slight breakout. We're a little bit above the resistance line, and the price projection here is about 31, and we're at 20, let's call it 23. So a lot of upside here, 35% potential upside. And this was a better way to get involved with oil than the actual energy oil chart, because the setup wasn't as clean as this one. So again, I think this is could be the next big thing. We'll see what happens. Whenever I don't like to say that, and but it is intact. Point and figure charts on a buy rating too. Corn and other commodities. So the metals have been red hot. 18 months ago, when I got involved in commodities and talked about this being the best setup for commodities that we've seen since the 70s, commodities way outperform stocks, and they're doing the same now. If you look at gold, silver, platinum, uranium, I've been in gold, I've been in silver. That was just recently went to neutral. Um, but these are commodities that haven't moved yet, and I still think so. This is where the big potential is. We want to identify new trends at an early stage, and then stay with those trends until they change. So with this big decline in corn, and then we saw a big 5 wave advance here, which tells me now the direction is up. And we got a correction here. This is wave one. This is wave two, according to the Elliott wave theory, which believes that cycles go in waves of 5. So we're setting up here, hopefully, for a wave three advance. And what my listeners know from hearing me, I look for third wave advances, especially on monthly charts. They're usually the largest, the fastest moving, and the most profitable. So on these two lower lows here, we got higher lows on our relative strength index. It's flashing a caution sign. Beware, beware, change of trend is coming. And in this case, it would be from bearish to bullish. So uh, this is a long-term chart. And so I started looking for smaller patterns to get me involved in this, where the reward to risk was favorable. And I see this nice bullish inverse head and shoulders. It's only two months long. It's like a man or woman hanging upside down, with the left shoulder, the head, the right shoulder, the neckline. If you measure from the bottom of the head to the neckline, you project that distance upward, you come up with approximately 19, which is only 7.5% above, but higher. But you saw that bigger pattern, and I'm trying to get involved in this before it's taken off to greater heights or developed a bigger pattern. I did this in cannabis. I did this in silver. I've done it in many copper, platinum, done it in many things. Seasonality is definitely coming into favor for corn. Now, seasonality is only a tendency. It doesn't always follow this, but it is a tendency, like everything, to line up with what you're looking at. And starting in October, this is the bullish season from October all the way through till June. That's when you want to own corn, especially the next 3 months. So we'll see if that holds true this time. Exelon, this is one that I've been involved in some time, went bullish last year at it looks like September. And so we have a descending triangle with a descending resistance line, a flat bottom. When it broke out, we purchased this, measure the base of this triangle, project up, you get 51. We got to 47. No negative divergence on this high. It looks like it's consolidating into a smaller triangle here. And and last week we got a bullish hammer where prices opened the week at the high, sold off intra-week. Buyers came in, pushed it back up to the high for that week, and that's called a bullish hammer in Japanese candlesticks terms. So, uh, I find this more attractive back when we purchased it based on this big pattern with a lot more upside, but there's still plenty of upside, and your risk here is only to 41. So you got, I don't know, you got 4% risk on the downside. The potential upside, you've got, I don't know, you've got like 8 points. So your reward to risk is 3 or 4 to 1, which is really attractive, and you get a nice dividend. Platinum, this is another one similar to Exelon. I bought it back here when I was seeing this consolidation, this big 1, 2, 3, 4 year symmetrical triangle. I knew once it broke out, it'd go fast and furious, so I got involved early. And now it's not as attractive as it was back here, but here's my stop at 117. I'm looking for another, based on this pattern, the price projection is 144. We're at 128, let's call it. So, there's still plenty of upside and the reward to risk is still favorable. When we start hitting higher highs, hopefully we do. If that happens, I will be selling more aggressively, and when we get to 144, I'll bring it down to, my minimum holding, which would be 1% of my portfolio. And T-bills, this is a place to park cash. This is not a buy recommendation. I'm just showing you what I'm doing with my cash. It's a 3-month T-bill ETF. It pays a 4% dividend, and every month you get a dividend. So next week it will go ex-dividend towards the end of the week. So that's where my cash is going. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. Have a great rest of your weekend.